Hello, it's Big Chad, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chad's Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about something called double divergence. Here's just a quick AI overview, of course. You can pause and read this on your own time. Bullish double divergence and bearish. Let's look at some images and we'll talk about it in the chart. So here we are, and you can see what the price is actually in a line, which works really well. So you see right now I have candlesticks. If I switch over to a line chart, and you could maybe even, hide all the other things just so maybe it's easier to look at when you're trying to draw it yourself. But the line chart makes sense for divergence. And why? Well, all oscillators calculate on the candle body close, which is why a line chart works really well for divergence. So for example, here we have a bearish divergence. And what that means is here's the price making a higher high. So you have a high, low, high, low, high. Two higher highs on the candle body close. And what's important is in between these highs, you have a trough. So there's a low and then a high and then a low and then a high. So there's been a reset in between each of these moves. And what happens with the indicator? It could be RSI, which I don't necessarily like to use for regular divergence, but you may. Could be the MACD. It's very popular. Could be the on-balance volume, for example. Could be any number really of indicators. But here you have lower high versus higher high, and then another lower high, right? And I'll show you an example of this. This is from Bitcoin back in 2022, all the low all the way back in 2022. And this actually was a triple divergence, which is interesting rather than a double. But see, the price here has a high, made a new high, lower high, made another high, lower high. And this was actually a triple divergence where essentially had, three lower highs in the price. This would be the on-balance volume, and then three higher highs, candle closes in the price itself, and then you saw there's a pretty big drop after that. Then you see it was essentially starting to do the same thing. You essentially had a double divergence here as well, where you had lower high twice, higher high in the price. And again, back to the indicator, you can also have the chart rather. You can also have a bullish divergence too. You'll often see this like in the on-balance volume, which is a very good one, where you would see the price making these lower lows and higher lows in the OBV. So even though the price is going lower, there would be counter trend volume. So for example, you would have like more volume on the green than the red candles in this sequence here, which would give you that higher high in the on-balance volume. It's suggestive of a weakening trend. Now, again, with any indicator, any divergence, you're really going to use it to confirm an idea based on what the price is doing in relation to support or resistance. But it's just an interesting piece of information, and you can use something like this to confirm your trading idea, or to not confirm it and maybe make you think, well, maybe I'll wait for a better setup where maybe I have divergence, and the volume is matching, what I wanted to do. So you have double divergence, right? Again, based on the candle body close, which is why a line chart works really, really well if you're trying to draw divergence. It can be tricky trying to figure out the wicks and which body rather. And so just try the line chart. It works really well for that. This is double divergence. And this is for the Trading Encyclopedia Daily Education series on my YouTube, Chad's Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I am a founding analyst. Folks, thank you very much, and I will talk to you soon. Big Chads out.